That's a pretty heavy statement. Sometimes the only winning move is not to play. And it's coming from a guy who once bet against the entire global economy and actually won. So now, the man who called the 2008 crash is just walking away. He thinks the game is rigged. And the big question is, why? Well, if we dig into his reasons, it might just expose a really dirty secret at the heart of the biggest tech boom we've seen in a generation. All right, let's get into it. We're going to break down exactly why one of the world's most famous and frankly infamous investors is calling it quits and what that tells us about the AI gold rush. So, our story really kicks off with this legendary investor, a guy who's pretty much built his reputation on seeing the cracks in the system before anyone else. Yep, we're talking about Michael Burry. You probably know him as the guy Christian Bale played in The Big Short. On X, he calls himself Cassandra Unchained. It's a nod to that mythical prophet Tess who could see the future but was cursed so that nobody would ever believe her. Kind of fitting, right? So when this guy makes a big move, Wall Street definitely sits up and pays attention. I mean, look at this track record. He calls the housing crash way back in 2005, makes a fortune from it in 2008, and then gets immortalized in a Hollywood movie. His whole career is about spotting bubbles before they pop. And that's exactly why this latest move, deregistering his fund in 2025, well, it's a really big deal. So here's what actually happened. On November 10th, 2025, his fund, Scion Asset Management, officially told the SEC they were terminating their registration. Now, this isn't just selling a few stocks. This is him taking his whole operation private. It means he doesn't have to tell anyone what he's buying or selling anymore. He's basically going dark. And why? Well, here it is in his own words. My estimation of value is not in sync with the markets. He's basically saying, I look at the numbers, and the prices I see out there just don't make any sense to me anymore. He thinks the market has become completely detached from reality. So, what part of the market is he talking about? Well, if you follow the breadcrumbs, it looks like this massive disconnect he's feeling is coming from one place in particular. The single biggest story in the market right now? AI. You really have to look at the two different faces of the AI market right now. On one side, you have the unbelievable hype. I mean, AI stocks are responsible for something like 75% of the S&P 500's gains since ChatGPT launched. That's insane. But then you see the other side. Just recently, tech stocks had their worst day in a month. Big names like Nvidia, Oracle, Tesla, all sliding. It's this kind of whiplash, this volatility, that Burry is walking away from. And look, he wasn't just talking trash from the sidelines. He was actively putting his money where his mouth is, placing huge bets against AI giants like Nvidia and Palantir. In fact, he lost over $9 million on the Palantir bet alone. But his real beef isn't just with the stock prices, it's with the accounting. He's been warning about what he calls aggressive accounting and how these big tech companies are stretching out how they account for costs to make their profits look way bigger than they actually are. And we're not talking about rounding errors here. Burry's estimate is that these accounting tricks could be inflating profits across the tech sector by a staggering $176 billion over the next couple of years. That is a huge disconnect between the profits they're reporting and what he sees as reality, which really leads to the next big question. Where is all this money actually coming from? Okay, so this is where we really get into the dirty secret of this whole AI gold rush. If the profits at the top are maybe not what they seem, who's actually footing the bill for this entire revolution? So here's the ugly truth. The incredible soaring profits we're seeing from big tech have a dark side. They are being directly fueled by the ever-growing, absolutely colossal losses at the AI startups that they supply. Let's just take OpenAI, for example. If you dig into Microsoft's filings, it implies that OpenAI lost something like $12 billion in a single quarter. We're talking Q3 of 2025. That is an unbelievable amount of cash to burn through in just 3 months. And it gets crazier. OpenAI itself has apparently estimated it's going to need $150 billion in long-term financing. Not to get rich, just to cover its costs for research and all that computing power. The amount of money we're talking about is just, it's hard to even wrap your head around. And after all that spending, when do they actually expect to make money? Well, their own forecasts say the absolute earliest they might even begin to scrape into the black is 2030. So we're talking years and years away. This is one long, very expensive gamble. So let's just connect these dots, right? All that cash that startups like OpenAI are burning, Where is it going? It's flowing directly to Microsoft, to Nvidia, to Google, who then turn around and report these record-breaking AI earnings. It's like a closed loop. One company's massive loss becomes another company's record profit, and the whole thing is propped up by venture capital. But the real question is, how long can a system like that actually last? This whole feeling that something that looks like a sure thing might actually be an illusion, it's not just happening in AI. To understand this better, let's look at a really weird lesson from a totally different and honestly unexpected corner of the market. All right, I want you to meet something called TIPS. It stands for Treasury Inflation Protected Securities. Basically, they're a special kind of government bond designed to do one single job: protect your money from inflation. The whole idea is when the cost of living goes up, the value of your TIPS should go up with it. Sounds like a no-brainer, right? The safest, most obvious investment you could possibly make when inflation is running hot. But here's the crazy part. Look at this chart. It is completely the opposite of what you'd expect. The data shows that TIPS actually perform worse during periods of high inflation, and they do better when inflation is low. The one thing they were literally designed to do, they fail at. How is that even possible? So, what's the lesson here? It's that what seems obvious on the surface is almost never the whole story. The reason this happens is because investors are more worried about what the Federal Reserve is going to do about inflation, like hiking interest rates, than the inflation itself. And that fear completely overpowers the bond's built-in protection. The real driver is hidden one layer deeper. Okay, so what on earth do inflation-protected bonds have to do with Michael Burry and the AI boom? Well, let's tie all these threads together. So, what are the big takeaways here? First, you have a legendary skeptic who thinks the entire game is out of whack with reality. Second, we see that the AI boom's incredible profits are being directly funded by absolutely colossal, and let's be honest, probably unsustainable losses at startups. And third, just like we saw with TIPS, the most seemingly safe or obvious investment can be a total illusion. The real story, the real driver, is often hiding just beneath the surface. And that really leaves us with the one big, lingering question. The last time Michael Burry saw a market this disconnected from reality, it was the housing market, and he made his name on the Big Short. This time, he's not shorting, he's just walking away, saying the only way to win is not to play. Which has to make you wonder, what's the big short he's seeing this time?
This urgent episode discusses a significant drop in U.S. stock markets, particularly technology shares, following the end of a long government shutdown, with the focus of Michael Burry based on multiple Wall Street Journal reports on November 14, 2025. Thank you.